Ed, after that OPEC Plus meeting, we just got the headline that UBS has now raised its Brent forecast to a $90 to $100 range. You're still at 79 for this quarter, moving lower throughout the year. If OPEC Plus maintains this kind of discipline on the supply side, how much upside risk is there to that view?
Well, I actually think that if you look at what the OPEC countries are doing, the OPEC Plus countries are doing, they're not adding the 400,000 barrels a day per month that they have in their plan, but they are increasing it by more than 250,000 barrels a day per month. You stretch that across the 12 months of this year, and that's an increase of 3 million barrels a day of production. So I think it's misleading to say, hey, they can't do it. Some of them are out of capacity. They're doing a lot. 3 million barrels a day is a lot. We think there's going to be a good 3 million coming from non-OPEC countries as well. So our outlook is slanted toward the bearish side because we just think this is an oversupplied market, and we'll be seeing that starting in the second quarter.
Is Russia doing what it needs to do? There are other names I could mention as well. Ed, we talk about what is being said that's being done and what is actually being done. Russia hasn't made its targets for the last few months.
Russia has made its overall target, more or less. They haven't made it for the last 2 months, and it's a complicated story when you look behind the headlines on it. Their compliance record in terms of what they're supposed to do is about 106%. So they are not far from doing what they have to do. It's not much different from the Saudi compliance record. It is a very different story from, say, Kazakhstan on the one hand, which is overproducing tremendously, or Nigeria on the other hand, which is barely able to do anything other than see production decline. OPEC countries vary in what they can do. Russia in particular had shut down a lot of brownfield production, focusing on greenfield for tax reasons and other factors, but they're now spending an incredible amount of capital to get that production back. And we have little doubt that between now and the end of the year, you add condensates to crude oil production, and they'll be up a good 1 million barrels a day. So I think we ought to look at the bigger picture rather than just what's happened in the last month. And this month, they claim that they're actually on target for what they're supposed to be producing.
Well, Ed, let's talk about non-OPEC Plus production then. We heard from Exxon and Chevron over the last several days. Exxon plans to boost Permian output by 25% this year. For Chevron, something like 10%. How do you factor shale into this equation?
Shale is massive in this equation. We won't get back to where shale was producing at the beginning of 2020 until the end of this year. So that means that shale was really as almost important a part of the rebalancing of the market from the oversupply of 2020 as OPEC Plus was. We lost 3 years worth of production in effect. But now production is rising at a really rapid rate. And when we see these corporate reports coming in for the last quarter of the year and projections for this year, we're seeing an estimated increase in capital spending in the US of about 30%. Some people think that maybe that's countered by inflation. We don't think inflation in the oil industry is anywhere near the 30% increase in capital spending. So we have calculated about 1.3 million at a minimum of liquid production coming out of the U.S. this year versus last year, about 800,000 a day of that coming from crude oil and the remainder from natural gas liquids. And with these new reports on increased capital spending and a movement away from the so-called discipline that Wall Street had applauded, and now Wall Street is applauding taking advantage of higher prices, we think our estimates for U.S. production are going to be on the low side when we come to the end of the year.
Why is domestic production been falling so much over the last few weeks? It's down 300,000 barrels over the last 3 weeks, I understand. Does that number ring true to you? What is going on in the near term right now?
In the near term, we call it winter and freeze-offs. So it's not unusual to see winter weather intruding in production. Capacity has certainly increased. We know that from what happened before these freeze-offs took place. And we know that the Permian Basin had gotten to its old record of March 2020 at 4.8 million barrels a day. It was at 4.9 last month and expected to be 5 million a day this month. So I think it's noise, and winter weather is part of the demand story. And it's also part of what's happening in shale at the moment. So once we get past this And we have to remind ourselves that we had an enormous freeze-off last February, which shut in production, caused natural gas prices to skyrocket in the United States. Oil was buffered by the oversupply and high inventories. This year it's not. So the inventory situation kind of exaggerates that for the high-frequency data in the U.S., but it's really quite temporary compared to where the rig count is, which points to a much more robust production future.
Ed, final question. My good friend and colleague Anne-Marie Hordern breaking a story out of DC that Washington and European capitals are talking to China, to India, to a range of countries about potentially providing gas to Europe were there to be an invasion of Ukraine. What is your assessment of the situation? How realistic would such a plan be? And how exposed is Europe right now to such a crunch?
Well, Europe is exposed to such a crunch, and yes, the capitals are doing what they can to secure additional supplies of LNG to get into the European market, and they're succeeding by and large, and they're succeeding in part because China, which had gobbled up all of the remaining available LNG once they ran into power generation problems last September, is now releasing those cargoes. We're seeing a tremendous movement of LNG into Europe. They can probably get by if there is a crunch. We estimate that there probably won't be a crunch. When we look at Russian exports, it's an intriguing situation because, yes, Ukraine is one thing, and they've limited supplies through Ukraine. They've not limited supplies through the other 4 pipelines, and it's not in their interest. It's in their interest to behave as they have been historically, to be reliable suppliers. The last thing in the world that they want to do is see an ability to see new supplies getting into Europe to cut their market share. So I think it's the lowest probability, but there is a buffer that's being worked out through the LNG market, through Qatar, and through the U.S. incremental suppliers of LNG.